Let's talk about what is SATYAM scam, how the scam was done, who exposed the scam, and how the people behind the scam got away with the scandal. SATYAM scam is a huge corporate fraud committed in 2009 by Ramalinga Raju, the founder and chairman of SATYAM Computer Services. He admitted to exaggerating sales, earnings, cash balances, and personnel numbers in the company's books. He also acknowledged siphoning off money from the firm for his personal use. The SATYAM fraud was considered worth 7,800 rupees crores and was formerly regarded as India's largest business scandal. The SATYAM scam highlighted a lack of corporate governance, auditing standards, regulatory monitoring, and ethical behavior at one of India's largest IT firms. It also damaged the faith and confidence of Indian IT sector investors, consumers, workers, and stakeholders. How did the Raju brothers do SATYAM scam? In 2003, Raju began lying about SATYAM's financial records to make it seem like the company was growing and making more money than it actually was. He worked with his brother Rama Raju, who was the managing director, and other top executives to create fake audit reports, invoices, clients, bank accounts, and even employees. Raju also used SATYAM's money to invest in his family's businesses, like Mehta's, family-owned real estate firm, for his own personal gain in real estate and other projects. Raju deceived authorities, auditors, investors, and analysts for 6 years, who were caught off guard by his fake data and bogus awards. In 2008, SATYAM's stock price jumped from 10 rupees to 544 rupees, making it one of India's most valuable IT firms. The firm has also received social responsibility and corporate governance awards, including the Golden Peacock Award in 2008. In a last-ditch attempt to rescue his failing company, he attempted to purchase Mehta's, a family-owned real estate firm, using SATYAM's financial reserves $1.6 billion. But this move only made things worse. Shareholders and board members of SATYAM were outraged, seeing it as a misuse of funds and a clear conflict of interest. Raju had just 12 hours to cancel the deal, but SATYAM's stock price had dropped by 55% by then. Raju finally came clean about his lies when he had no other option left. On January 7, 2009, he confessed to inflating SATYAM's assets by a whopping 7,800 rupees crores, which made up about 94% of the company's assets. He also admitted to exaggerating SATYAM's revenues by 5,040 rupees crores, constituting nearly 75% of the company's revenue. Raju claimed that he acted alone and neither his auditors nor board members were aware of his unlawful activities. SEBI, CBI launched a thorough inquiry in response to Raju's admission. Raju and his associates were caught and charged with various offences, including money laundering, insider trading, forgery, criminal conspiracy, breach of trust, account falsification, and forgery. The SATYAM Computers scam aftermath left its employees, clients, investors, and suppliers scared and worried. Layoffs, cancelled projects, and unpaid debts hit the company hard, causing widespread damage. Who exposed the SATYAM scam? The SATYAM scam came to light when an anonymous whistleblower, using the alias Joseph Abraham, sent emails to Krishna Palapu, a company director, disclosing the fraud. Palapu forwarded these emails to another director and S. Gopalakrishnan, a partner at PwC, SATYAM's auditor. The whistleblower also informed SEBI and the media about the scam. These emails triggered investigations by regulators and auditors, ultimately leading to Raju's confession and arrest. How Raju was able to get away with the scandal. Raju managed to pull off the SATYAM scam for 6 years by taking advantage of loopholes in accounting and auditing processes. He deceived stakeholders using his influence with the help of his brother Rama Raju, who was SATYAM's managing director, and a group of senior executives. He orchestrated the fraud. Additionally, Raju bribed World Bank officials and other clients to secure contracts and avoid scrutiny. PricewaterhouseCoopers, PwC, which was SATYAM's auditor, was a crucial accomplice to Raju in the fraud. PwC neglected its duty to properly assess SATYAM's financial records, enabling the deception. They breached auditing standards and colluded with Raju in manipulating the accounts. Additionally, PwC ignored warning signs from whistleblowers who tried to alert Satyam's director, Krishna Palapu, via anonymous emails about the fraudulent activities. Raju also utilized his influence and reputation to gain the confidence and admiration of regulators, investors, analysts, and the media. He depicted Satyam as a successful and ethical firm, collecting multiple corporate governance and social responsibility awards. He kept a low profile and a modest manner to avoid suspicion or criticism. Who is to blame for the Satyam scam? B. Ramalinga Raju, his brother, and Satyam's former managing director, former PwC auditors Subramani Gopalakrishnan and T. Srinivas, former Chief Financial Officer Vadlamani Srinivas and Raju's other brother are mostly to blame for the Satyam fraud case. What happened to PwC after the Satyam scandal? Following the Satyam scam, PwC faced criticism and legal actions. The Indian government barred PwC from auditing companies for 5 years. PwC implemented measures to strengthen audit procedures and rebuild trust. Over time, it recovered, emphasizing transparency, accountability, and high-quality services to regain client confidence. Who acquired Satyam? Tech Mahindra, an Indian multinational technology company, acquired Satyam Computer after the Satyam scam in 2012. Why did Mahindra acquire Satyam? Tech Mahindra, which had previously concentrated on telecom, saw the Satyam purchase as an opportunity for diversification and development. Satyam's scale, worldwide reach, and renowned customers created a strategic opportunity for Tech Mahindra and the Mahindra Group to accelerate their expansion.